it's been quite a tumultuous time since we both first spoke. I know we've spoken again, I think at the crypto gathering, but on the platform, we haven't spoken for a long time. And that kind of interview changed a lot of people's lives, I think.
Yeah, it was an interesting time then. Yeah, what was Bitcoin, like 15,000 or something? It was like in the teens then.
Yeah.
And that was before we started to see all of the advances and the buys by the other companies.
So what I'd love to dig in to start with, since then, what are your learnings? What have you learned about the whole space? Because as we all know, this is a kind of hugely evolving situation and we kind of are figuring things out as we go. So what didn't you know then that you kind of know now?
Well, I think in every month for the past 13 months, there have been positive developments that give us more confidence in Bitcoin. The result of the election was a positive development. The regulatory regime, I think, is a positive development. I think we had 0 public companies holding Bitcoin before MicroStrategy, and now there's like 25 maybe. By the end of this year, we'll have about a dozen Bitcoin miners that have come public. And if you look at the success of the miners like Marathon and Riot, and I think I just read a few days ago that Hut 8 is doing a secondary offering. You've got SPACs in the work from TerraWolf. You've got Core Scientific coming public. You've had Coinbase come public, right? Since we last spoke, you've seen Coinbase not just come public in a $1 billion IPO. Coinbase also brought a $1 billion convertible offering to the market. And then just a couple of days ago, they brought a $1.5 billion junk bond offering to the market, and they upsized it to $2 billion. And they raised that money at 3.5%, a blended rate of 3.5% interest. So, what I've said from the beginning is it's important that we carve a channel between the ocean of traditional assets and the crypto pond, right? And the ocean of traditional assets is $100 trillion worth of debt, which is yielding nothing on a real basis. And it's whatever, 50 trillion, $80 trillion worth of global equity. And it's hundreds of trillions of dollars worth of commercial property and residential property. And it's $80 trillion worth of cash and cash equivalents and things like that. And the key to carving that channel is the public markets. And so in a world where there are no publicly traded companies, no listed, registered companies that can actually cross the chasm, then the flow of capital into the entire industry is just retail. And what we've seen is a rotation, right? If you'd ask who's driving the industry a year ago, you would have said retail investors with 10, 20, 30, 125x leverage on an offshore exchange. And if you'd ask the question, who's driving the industry today? Well, it's a hodgepodge of a lot of different players. You've still got, the offshore exchanges, but now they've allowed that they will back down to 20x leverage, to be more conservative. So there's no doubt that offshore crypto leverage money is in the system. I think it drives volatility. Sure. In my opinion, more than it drives sustainability. If you want to see Bitcoin go to $10 million a coin, then it won't come from 125x or 20x offshore levered contracts and traders. It will come from insurance companies and macro hedge funds that have capital, $100 billion of capital, and they just allocate 5% of it to Bitcoin forever. And when you start getting 5% allocations forever, then you'll start to build a monetary base and a capital base that will drive the industry. So I think in general, the bullish developments of the past 12 months have been institutional adoption of Bitcoin, and that has come in the form of the companies, the Squares, the Teslas, the MicroStrategies, the Marathons, the Riots of the world that are actually in the space. I think that the second thing that I've been a big proponent of, a big cheerleader of, is if you're going to be in the Bitcoin mining business, then you're naturally long Bitcoin. And if you're naturally long Bitcoin, it's inconsistent to ever sell it. So if you're a Bitcoin miner and Bitcoin goes to zero, your business is worth zero. And if Bitcoin goes up and you sold your Bitcoin, your business is worth 20% of what it would have been worth. So if you really are a Bitcoin miner, you're long Bitcoin, which means you hodl all the Bitcoin. And so at this point, I think you see an emerging consensus in the past 12 months that if you're a Bitcoin miner, you should never sell it. Okay, now that's only consistent with the idea of Bitcoin miners all coming public in the North American markets. If you're a Chinese Bitcoin miner, you didn't have the capital markets to not sell it. You have to dump it on the market, right?
Yeah.
And the narrative was always, oh, the miners are dumping, they have to sell their Bitcoin, right? Watch the miners. And if you're a Bitcoin miner, Raoul, in Europe, or if you were trading on the Canadian Stock Exchange or the European Stock Exchange, if you dig a little bit deeper, you'll find that those companies had a liquidity of like $2 million a day, $1 million of trading a day, $5 million a day on a good day. If you look at the liquidity in Marathon and Riot, 400 million a day, 250 million a day.
Incredible.
Okay, so wake up call. You move from a cash business to a small, to the secondary public markets, to the primary public markets. When you move to the primary public markets, let's take MicroStrategy. MicroStrategy had a full market capitalization of $1 billion before in August of last year, with 500 million in cash. And we've had days where we traded $1 billion worth of equity. Now we have 500 million in liquidity a day. Okay, so what is that telling you? Right, the answer is as the companies in the space come public and as they migrate to the capital markets with the greatest amount of capital, if you can raise equity capital, at a high multiple, that's cheap capital. If you can raise convertible debt, since we talked, MicroStrategy did a $650 million debt offering and paid 75 basis points, but then we followed up with a $1.05 billion debt offering and paid 0 interest. And then we followed up with a senior debt offering and we paid 6 1/8 interest on just junk debt. There's nobody in the space that thinks that Bitcoin isn't going up 6% a year.
No.
Nobody. So the issue is, do you know how much how much capital I've invested in Bitcoin at this point, Raoul?
No.
$3,335 million.
That's pretty spectacular.
So one person.
Yeah.
But I didn't have $3,335 million in my piggy bank when we last spoke.
Yeah.
Now, what happens if more than one person does this, Raoul? How many people does it take, right? And the answer is you need public entities, and they need to be creditworthy, and they need to be able to file a registration statement. If you can file a registration statement, you can tap the fixed income markets, you can tap the convertible debt markets, you can tap the equity markets. And as you do that, that capital becomes permanent capital, right? Because, by the way, there are some companies that can't own digital property. They can't own the underlying property that is Bitcoin. Like if I have $10 billion in a fixed income fund, it took me 30 years to establish my relationships with my limited partners. I've got a charter. I have a charge. I can go and buy fixed income. Right now, my fixed income instruments are yielding 2% or 2.5% or 3%. Or I can buy MicroStrategy yielding 6%. It looks like a pretty fat coupon to me. Well, we had lots of firms that gave us $50 million orders after one conference call, Raoul. We did that entire deal in one day. No one-on-ones, one conference call, 130 firms on the phone. Okay, I'll give you a $50 million order. I'll give you a $25 million order. I'll give you a $100 million order. And why do they do that? Well, I mean, you get the Moody's credit rating, you get the S&P credit rating, you're a public company, you package a security, right, a derivative of a crypto asset called Bitcoin. It's a Bitcoin bond. And you put it out there and they can buy that thing. So what we've seen over the past 12 months is we've seen the creation of public securities. A lot of people can buy, $500 million worth of Marathon stock or $100 million worth of a Bitcoin mining stock, but they can't buy the Bitcoin.
Yeah.
They can buy the convert, they can buy the equity, they can buy the junk debt, but they can't buy the Bitcoin. And of course, people in the crypto industry, the crypto traders, they don't understand why, right? There's still a group of people that think, oh, well, you need to buy it and put it in cold storage and keep your keys, which is, what would I call it? An ideologically pure approach to the industry, which works for a subset of people. But when I'm talking to a guy that runs a $2 billion portfolio, if he went to his boss and said, I want to buy $25 million worth of Bitcoin and hold my private keys, he would get, between laughed and fired, right? Like, that's not happening in 1,000 years, no matter how hard. On the other hand, the guy can go like, okay, so yeah, this is good. So what was the interest rate again? 6%? Okay, I'll take 25 million of that. Next. He's got another deal to do the next day. So I think that what we're seeing is the maturing of the industry, the maturing of the asset class. When JP Morgan and Morgan Stanley started offering Bitcoin funds, like the NYDIG-backed funds and the Galaxy-backed funds, that was a big endorsement, a big step forward. And I think we got Wells Fargo, we've got Morgan Stanley, we've got JP Morgan. They've all moved to offer those funds. That was a big deal. And then I think that when the ETF comes, right now we've got ETFs in Canada, right? I don't know if you saw, Fidelity just went before the SEC. This is Fidelity. This is Fidelity for the last 60 years. They have like $10 trillion of assets under management. And there are companies that have been doing business with them for 50 years or 30 years. Fidelity goes in front of the SEC and they give a 20-page presentation on why Bitcoin is mature and why it's time to approve a Bitcoin ETP in the United States. And there's a lot of institutions that they will take $10 million chunks and $50 million chunks of this stuff once there is an ETP of sorts. And roll the clock back 18 months,